Hi traders, Steve here again from Option Alpha. Today's video I actually want to discuss a couple of topics that overlap pretty nicely this time of year, right? So the first thing I wanted to mention was this bullish seasonality that we tend to experience at the end of the year. We actually just put up a blog last week that discusses this so-called Santa Claus rally, right? And what historical data suggests is that December and January in general are relatively bullish months, and specifically the last 5 days before the end of the new year and the 2 days following New Year's have a relatively bullish bias, right? I think over the last 50 years, that 7-day stretch averages about a 1.3% gain, and you can see in this image here that almost, or actually all of the days are bullish in that period. So we're coming up right around this area, and you can see the next few days suggest a little bit of an upside bias. Now, I kind of like seasonality stuff. I geek on that a little bit, to be honest with you. I think it's interesting to look at seasonality trends and these events and things like that. We did this blog last week. We're actually going to do a bunch of blogs next year that explores that. Things like OPEX day performance, Fed days, right? Certain seasonal things, specifically next year being an election year, will be interesting to look at all of that. So if you have any ideas for that, love to hear your thoughts in the comments if there's anything you'd like to see us explore. I'm also going to share a link to this blog as well. So that being said, yeah, I like seasonality, but I'm not going to use that as the entire basis of what I'm doing inside of my portfolio. So I want to jump over there and look at the bot that we've been paying attention to over the last few weeks. And if you haven't been able to notice, if you haven't jumped in there and seen it yet, we have now added beta weighting to your bots and all of your portfolio as well. So we can see in this bot right now, I actually have a negative beta weight, which is super interesting. I'm loving this feature so far already. But what you can see is this is basically telling us, right, the theoretical dollar move of my portfolio, or in this case, the specific bot, were SPY to move up $1. So my beta weight is negative 20.66, which is implying at this moment if SPY went up 1 point, my portfolio would lose about $20. So, overall, I want my positions to come down, right? I want them to be a little bit bearish from where they're at now. As you can see, they're actually all in the money, varying degrees. So not crazy. They're all right around the break-even point except for that SPY position. But, overall, we'd like to see a little bit of a pullback in all these tickers. So how can I use that to inform what I want to do? Well, like we talked about a few videos ago, the bot still isn't really adding a lot of positions, right? All of these have been open a while ago. I actually just swapped out this QQQ trade this morning because of their dividend to update the new strike prices. But other than that, they've all been open a few weeks. We're still seeing low volatility, still not opening a lot of positions. And now that I have this awesome new information, right, arming my decisions about where my portfolio is, I'm kind of intrigued to manually add a position and possibly add a little bit of a bullish bias, right, to bring some positive beta weight into the portfolio. So here's how we can do that, right? We're going to kind of kill a bunch of birds with one stone. We're going to get another position in there that's high probability. We're going to hopefully balance out the portfolio a little bit. And sure, it helps that we have a little bit of a seasonal tailwind as well. So let's jump over to trade ideas and see how we can do this to accomplish all those goals. Just going to kind of work across the top here. Obviously, we want to look for some bullish positions. If you notice, all of those trades had the same expiration date, so I'd like to focus on that. So we're kind of keeping it all within the same expiration date, which was that January OPEX. I still want a trade that has at least a 50% chance of probability, and of course, we're going to focus on positive alpha. So I now have all of these trades, right? And I can sort these over here by beta weight, so I can see how much each one of these positions, right? How much beta weight would this add to the portfolio? This Tesla short put spread would be 41, so right, that would flip my entire portfolio. I'm negative 20 now. I would add 41, I'd be plus 20. So I don't know if I want to do anything that extreme. But I can filter my way down through all of these available trade ideas and sort of look at what each position would bring to the table at my portfolio, right? How much beta weight could I then inject into the portfolio, so to speak, to get a little bit of a bullish lean? So I can kind of scroll down. What I'm noticing with all of these is that the risk is pretty high. You all know me, I don't like to take on that much risk. Usually I would come in and maybe augment those trades a little bit, right? Pop it open and modify the strikes, but I don't want to do that because I'm looking at the beta weight specifically. So actually I want to take a look at debit spreads. The other big thing to come out of this recent platform release last weekend was the ability to look at debit spreads and trade ideas. So actually going to do that, and we have one trade, right? The beta weight is 10.78, which is actually nice, right? So we're not like overwhelming the portfolio, but we are adding a little bit of bullish delta. You can see the delta is at 21, so that would be good for the portfolio for where we're at now. Probabilities are great. Probability of max loss is tiny. It's a positive trade, right? EV of 31 almost, alpha. Now the max loss is still relatively high here, but the other interesting thing is Apple's IV rank is 8. So not a bad time to buy debit spreads. I'm just going to pop this open. I want to look at this. So the risk is high, but look at that probability of that happening. That's so low. And honestly, if something like that happened, the rest of that portfolio, it would benefit, right? If the market's going down quite that much, the other positions would actually benefit from that. So I'm adding one position to help 3. But look at that. Yeah, I mean, the break-even point is 188.55. That's well below Apple's current price. And if it did stay up there, I could bring in and kind of balance out the portfolio. So I'm going to try. I'm going to try and pay a little bit less. Actually, I'm happy with that. I'll use smart pricing. I'll go fast. Positive EV. I'm liking this. It'll be the first debit spread we will add to that bot. So I'm interested to do that as well. It's a great time with IV around 8, like I said. Let's just go ahead and place the trade and see what happens. Now, it's going to work through smart pricing. Exit options is something maybe I'll circle back and update in the future. I'm kind of curious of how to play this one since, if the position did stay up there. There we go. Perfect. Filled already. So we got a little bit of a discount off that ask. But yeah, there we go. We still have great probabilities. Yeah, I'll circle back to exit options, right? Because if the stock stays up there, then those other positions are going to probably be losing money. So I'm maybe happy to take all of that from here if I stay above it, right? Which is great. Like I said, right now I'm still well above the short strike even to capture that full profit. And then if it does come back down, maybe we can manage it in conjunction with those other positions, but we'll circle back. So, all right, thanks for joining me. Hopefully that shows us a few different ways we can leverage some of these new tools, debit spreads, beta weighting, seeing how a new position will fit into the portfolio.